Okay, guys, welcome to Chats on Genius Street, where we're just going to talk about some issues and then just kind of put this out there into space so other people can hear about it. What we were just discussing is kind of how the long term has different variables now that people need to be aware of. And Alan, what were you saying about how different it is now, and all these different predictions and all that stuff? It's not necessarily the same as it has been in the past.
Yeah, yeah. I'm just going to point to a book, Reminiscence of a Stock Operator. And there's some other books I read some are old, where people are saying that the market's going to crash and the whole world is going to come to an end. There's always people that come along and say these things. The world is ending, and or the market is going to be having some super crash bear thing going on. And every bunch of years, there's somebody or a bunch of people that climb on it's going to be a really bad bear. And then there's others at the exact same time that are saying it's going to be amazing. This is just a dip and it's going to take off and go super up. And they'll say that about a stock, or they'll say that about a market, or like cryptos, particular cryptocurrency, or anyways, it's always that, like the tulip bubble, it's all that same thing. It happens over and over again. And the point is that right now, if somebody said something about, well, tulips are going to be it and you're going to make a fortune, you'd look at them and go, are you nuts? And justifiably so, because we have a context of information that says, come on, that's not such a crazy hot idea. And this is where people are now using negative yield curves. And you can Google what that all means. But historically, they go, well, whenever there's an inversion, that's the other word they use, of the short-term versus the long-term yield on bonds, that always means, and then they follow up by saying, a bear market, or, so this thing always means that thing. And the truth is, we're not in the same place that we were 10 years ago, technologically, political ideas. You got trade wars that are really firing up. It was about 10 years ago that the U.S. economy stopped being the world's largest economy. And that's a bit of an ego blow but it's things like that have changed. And so this latest thing about, well, negative yield curve is again, and that always means, there's going to be a big bear. Things are not the same as they were back then. You have now governments that are printing money like crazy. So that has an effect on liquidity. So when people say, well, the bond rate is doing this, that means that this is time to do something else. That was true in that era, but it's not true now, because fundamental things have changed. Things that change the ground that you're standing on are different. So the idea about, well, that it always has meant something isn't the truth anymore. And you look at the economies of the United States, how that's changed since the 80s, where a lot of outsourcing, and downsizing and all these things happened. That's very different than how the U.S. economy was back in the 50s and 60s and 70s. And, the U.S. became the world's largest economic producer back in around after the Civil War. China and Japan and all that, they were doing stuff, but they weren't doing nearly as much. So anyways, the point is things keep changing, and to use these rules of, well, these kinds of things always mean this other thing. That's not actually true because of circumstances, right?
Yeah, and bear with me for a second. There's generally two types of chaotic systems. There's the first one, level one, which is the chaos that happens does not react to predictions or variables that are put into space about it. For example, I know it's complicated, but it's real easy. No matter what you think about the weather, it's not going to change the weather. That's what that means.
Yeah,
Now,
the weather's in charge.
yeah, exactly. It's like there's variables. So, you're not important enough. And now, if you built a solar reflector the size of the US, well, okay, then what you think will affect the weather, but you know what I'm saying.
Yeah.
The second one is what we're talking about. It's a level 2 chaotic system where the system actually reacts to the inputs about like the predictions about that system. So for example, if there's someone out there who's really holds a lot of, like, let's just say Warren Buffett. A lot of people look to that guy for
Hmm.
information. If he says the market's going to crash and it's going to happen in the next year, that actually changes the future potential for the market to crash because people will actually react to that variable, and the future has just instantly changed because of that. And this is the problem that we see over and over and over in the presence of things like cryptocurrencies and these things, Alan, like what you're talking about, where they come into play, where how can you actually make a prediction? Because the prediction, if it's good enough, will actually change the future because people will adjust.
Yeah, absolutely. And what that was the core problem I had, when I first started looking at investing, and is what do you count on? Like, what do you use that's a solid base to say, hey, I can actually count on this? And when I started out, there was the only thing that I had that I could say is a truth. And of course, there's more truths now that I built on, but they're like high probability of being reliable. See, I didn't say it's always. It's a high probability. So, for example, a stock doesn't go up forever and it doesn't go down forever. And the rare exception is that a stock goes to zero and then it never comes back. But you see, that's quite rare, irregular kind of thing, especially when you're talking about stable companies. They generally don't fail. So you say, okay, so I got one truth that I can rely on, high probability. And then as time goes on with that kind of thinking, what's another truth? And it's hard to find. It's like deep thought. And so the goal, of course, in a case like that is, well, so when it stops going up forever, how do I know what do I do with that? And I know you have a whole set of videos that talk about that kind of thing, but that's also where the tools are, math based, is embedded into the thing that says, hey, around here is a good time to get out of the thing or unload half of it or something. And around here is a good time to buy this thing. But that's based on just, the pure, price behavior of things. That's not based on the bigger thinking that says, yeah, well, what's the mood? Well, the government's printing money like crazy. Well, what does that mean? And that happened since quantitative easing. What does that mean? So now there's all these people with all this money out there. Okay, so what happens when money gets tightened up? Well, that's where history is true. Like if money really is getting tightened up, the market will crash. How hard? Well, keep your eyes open. That's all you got to do. But
Right.
right, and that's where logic says, well, when it gets to this point, whatever that is for you, I have my exit points. It's like when it gets to that point, I will leave because probability wise, that's a decent. Well, how do you build a probability? Well, that's lots of numbers and lots of data, and it's not a guarantee. None of it is. It's one of those. This is a pretty good time to leave. You don't have to time it perfectly unless you're, like seriously, unless you're really greedy, which actually works against our ability to do well. Because then it's emotions and it's not pure logic. And people that are trading with emotions always underperformed. So there's my always. As a group.
Right.
Individually, somebody might do better, but as a group, people that trade with emotions always underperform somebody or a group that is generally cognitive, that has a tested plan. It's like, well, what do you do? Well, I know this plan works. Why? Because look here, look at all this results. Oh, okay. How can you measure results when it's like, well, I had a bad pizza last night, and so I feel like I'm going to just, trade, something else. Like I'm going to buy this because I feel bad. I'm using weird examples, but the point is how do you measure? It's like you can't. And you can't predict either, because it's like, well, how are you going to feel in 2 months from now? I don't know.
Yeah, exactly. And this whole thing about probabilities is really kind of comical to us, but it's really important it, to realize that the best you can get in these systems is probabilities. So
Yeah.
here's an example. If there's out of 10 people, we know that 30% of them are going to be blue, and then
Mm.
30% of them are going to be yellow, and then 40% of them are going to be red. And then out of a, a sample size of 10 random people, we can say that those are probably what you're going to get. But here's what you can't do. If someone was randomly chosen out of that room, you couldn't reasonably tell what color they were. You
Mm.
don't know. You need
No.
more context. And that's the problem with probabilities. We don't deal in the world of prediction. That is the smoke and mirrors of it all. We believe in preparation, and that's what this whole thing is about. So from the math
Yes.
expert himself, I mean, what is the important piece of probabilities that you can share with us?
Yeah. Well, yeah, I guess, to put it in terms that I think I understand your question is the, I have a rule that says, when something reaches a particular point, then I have a behavior that's attached to it. And so there's no thinking about it. But to build the rule, you need to build the probabilities. Well, how do you build the probabilities? Again, it's just you need lots of numbers. And they have to be somewhat dynamic, but not too dynamic. And I know I'm being vague here because it's a deep topic that would, take hours to, and a whiteboard or something like that to explain. And I know most people don't give a damn about that. They say, hey, just give me a tool, because I'm that way. Like, I just want to drive a car. I don't really need to know all the things about what goes on inside the car. And so I'm the same way. It's like, yeah, sure, I built something, but I built it so I could use it. And I actually know that as time goes by, I get more stupid. This is just, human dynamics about, age and brain capabilities and so forth. So I wanted to build something when I was still smart enough to build it, so that when I wasn't smart enough, that I could just use it.
Yeah, well, he's being a little bit modest here because when he says that, he's still in this area of unobtainable for most people. So it's all relative.
Yeah, well, but yeah, it's like I can see my intellectual decline in time, and this is what everybody gets, and so knowing that happens, I have a father, I see how he's declined in time. The point was, I need the simplest tool that is reliable, and that's where you talk about probabilities. Reliable means that it pretty much works. Like when you go to an intersection, I use driving things as an example because it's, tangible for people. Whether you're a pedestrian or driving a vehicle of some kind or a bicycle, you don't know that somebody's going to not run the light, go against it and then, hit something else. You don't know that because they could be distracted or whatever and all that kind of stuff. But it's pretty reliable that you can cross the street in some safety if the lights are agreeing with that kind of motion. That's exactly the kind of thing that we're doing with the tools. Is we say, this is pretty good, but we have to keep our eyes open. Like, is now the time to be investing in oil companies? Probably not. What about cigarette companies? Yeah, cigarette companies. We've heard these stories for a while. Probably not. Except that the cigarette companies and the oil companies, they're not just sitting around doing nothing.
Yeah.
Uh, they're reacting too, because you see, that's where you were talking about one thing influences another thing, and then influences back. So people go, well, we don't want to destroy the planet. We actually plan on living here. So maybe we should, do some greener things. So, not burn forests, but maybe not burning oil, but maybe we should be doing something that is renewable, that doesn't, poison the atmosphere. And so, so those people that are in that era, like, I'm using the cigarette companies and oil companies, is like, they know that this is happening. They can see it because investors go, slowly. It's not like a hard edge that everybody just dumps out one day. Some people still hold those stocks because they go, well, they're still selling cigarettes in Malaysia, or wherever it is. So that's the thing about investing. And it's our attitude that is more important than the tools. Because if we say, well, I'm going to hang on to those things and I believe and they should, and like if let's say I'm a cigarette smoker and I want cigarettes, well, I'm going to hang on to the stock because, I want that, so I'm going to show my support by doing that. My dad's a big, you got to buy, American made products because, you got to support the local economy. He would never buy a foreign car and all that stuff. And he's right to some degree. But the other part is forgetting about what car you buy, where you put your money as an investment. Don't have that emotionally attached to the thing as much as it is to what the thing does for, a bigger picture. So yeah, Tesla was a good investment, at points. Netflix is an era changing thing, a really good investment. And that's what am I doing as, who did better, Chevron or Netflix these last 30 years? Well, Netflix wasn't around until about 15 years ago, 20 years ago. It was a really good investment. Because what? Well, what are they doing? So, this business of always, you had the patent office back in 1920 saying there's no new inventions ever coming. We can just close the patent office. Well, that's what one guy said. And that's how, the idea of, like you were saying, and, somebody says that I should get into this. And, well, how do you know? That's what they say. And they could be really convincing because their style of speech is like, oh, they know, they spoke so confidently, they must know. Well, maybe they do. That's all I'm saying. Maybe they do. But the idea of that,
tendency to assume that if someone's telling you something with confidence, that
yes,
they must know more than you. And
yes,
that's just not the case. I mean, it does require a little bit more introspection before we go and make those decisions. I mean, there's just there's too much information out there, and there's too little context floating around.
Yeah, I love the lines that people use when they use never. You'll never find a better than da 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 da. And as you say, it's and because people have taken sales training stuff, they learned, well, I have to speak with my command voice, or I have to speak with my confidence voice, or I have to be a better communicator. And so they've adapted their style to tell a half truth. Why is it a half truth? Because they actually looked around, and this is where we're trusting a guy or a gal who says something with the voice of authority. Well, how do we know that they actually did the homework on there? Well, we don't. And that's where getting back to the goal of, well, how do you know reliably that a thing is going to be so? Well, the point is, like intersections and chaos, we don't know a thing is going to be so. Nobody knows until after it's, already happened. But is it reasonably likely to happen? And then that's the question of how much risk do I put in? So that's one of the other major failures for people when it comes to investing of any kind, is they put too much weight on one thing. And again, emotions, not logic. Because have they done the research? They probably don't know. It's not that they're dumb people. It's like, I know I didn't, there was a lot of things I didn't know when I started out, and there weren't that many resources to find these things. So it's like, well, okay, so an attitude called, how do I research this thing so that I know that the information is reliable? That is step one. How do I know these guys are telling me reasonably truthful things? Not that they're trying to lie, but they're doing their best, and that it's, how do I know that? Well, it takes a little bit of research, but not much. It's the, what do you have? How did you determine this is so? Like, what was your Well, I talked to my cousin. Well, how does your cousin know? Well, he just felt that way. He had his reading at a psychic, and our psychic told him. And so he's been running around telling everybody that the sky is going to fall. And then he gets hit by a beam from a girder. Well, that was that was him. That was his truth. That was his story, his belief, his whatever. But that doesn't mean it's a broad scope that's applicable to me. So this business where we started about, well, the yield curve on bonds is inverted, meaning that the short term and the long term rates, one is above the other, and that's not normal. That usually, not always, in the past has always meant this and this. But it doesn't even matter. It's like, okay, so the bond market means something about availability of money and interest rates. We've never had in the past banks having a negative interest rate. Well, we've got more and more countries now where banks offer a negative interest rate. And you go, what? Why would you put your money there? Well, because if there's a crash in money or whatever the thinking is, the point is it's a reality, and that's a difference that we've never had before.
Yeah. Well, this really highlights the things. I mean, we're over here trying to predict the next crash or the next bull market, whatever it is. Like, no, this is the two things that we found are the most important, and it's really, really simple, is you need to make sure that you're preparing yourself every day, moving more towards things that are agile. Yeah. So that you can react if something does happen. Because one of the worst things, like, for example, a house, if the housing market starts going down, how long does it take you to get out of that house if that is what you're trading or investing in?
Mm-hmm. It's tough.
That's an important thing too, because most of these retirement accounts, they take days or weeks to actually get out of the position.
Yeah.
Big problem.
Yeah, there's actually, again, the old truths versus the new truths. In Canada, there's a lot of really upset retired people because the old model, and this isn't a criticism on them, I really get the pain that they're feeling. The old model was, well, you buy 2 or 3 houses, one you live in, and then you rent out the other one, and then eventually that's your retirement income. So your house is paid, and you get an income from this other property. Well, the government says, hey, there's a lot of money sitting there, and we're just going to go milk those guys. And where they're getting taxed extra heavy on however the government's doing, well, you're not living in that property, and you're not a business, but you're sort of a business, and so they're going through some pains. This is in British Columbia because there's a lot of foreign investors, and so the Hong Kong thing, investing. Anyways, it's just a local event. But the point is that here's a bunch of people that set up a plan, a 40 or 50 year plan, and things that they have no control over and they can't liquidate out of are becoming a problem for them. Yeah. And so some people are selling out of their houses and saying, okay, great. I'll keep what I have. Or I know one guy, he's sitting on, millions of dollars of property, and he sold out of almost all of it. He's got this really big, beautiful RV. And basically he gets in there, he's retired, and he's, motoring around United States and Mexico. And yeah, there's stories about Mexico, but he's got that covered. So he's enjoying life and running around, and rather than fretting about, well, the next move in politics is going to be this, and we have to go over here and we have to vote and, do all that. He's like, I see the wind has changed. Now, this guy is a trader. He's been trained in investing and trading with us. And so he's been at it long enough that he goes, hey, wait a second. This is like a trade. It's turning bad. I should get out. Because his brain is already wired around that agility thing. He said, okay, it's about the time to leave. See, that's the thing, too, that when people are stressed out, because of, the environment and conversations. That's what I mean by environment, like politics and, legal changes and all that stuff, where they get taxed heavy over here and all that stuff, is they can't think as clearly because the capacity is diminished. They live in a semi-stressed environment all the time where, they go to the grocery store and some guy, honks at them for, not parking exactly right, to suit, that person. And because they're stressed out, you see that stress is, bouncing around, and it's in a bucket that, so the idea that this guy says, hey, I'm going to get in an RV and I'm going to enjoy life and I'm just going to travel around, and I got more than enough money to buy 2 or 3 or 4, full up RVs, and I'm going to take my money and I'm going to put it into something agile, and I'll just go look at the markets, once a month or once a week, and, move my money around a little bit here and there. But the stressed people are like, but I got to squeeze every penny out. It's like, you didn't pick the top of the market exactly right. And well, nobody can. And that's the thing about the, low risk and probabilities. I've bought and sold in the day trading thing I've sold at the absolute best price on maybe 3 occasions where, the option price was this, and I was that trade that hit that best price. And I bought at the absolute bottom of, I just, boom, I knew that the thing was turning, and I just, got that one, and I bought at the best price and I sold at the best price. That's happened, not very many times for the number of trades I've done. It's like less than 1% of the time. And my point of it is, every other time, this is probabilities. I am not going to get the best price. I'm going to get near the best price. I might get something that's not even so great, but I needed to because conditions changed, and so I got out. The point isn't about salvaging everything. The point is, if you're on the Titanic and it's sinking, you need to know what you're going to do. Well, I'm going to save me. I'm going to save my family. If something's sinking, how long does it take before it is sunk and before it's too late? Like, you can't be the last people off the boat because you might not get off the boat. It's that kind of thinking. It's like, well, again, we talked about the attitude. What's the attitude you're going to have here? It's like, well, I need to, if things are going bad, I need to salvage as best I can a reasonable, approximately right amount of money. And so then you go, well, so your confidence shifts from predicting to probabilities. It should be safe to cross the intersection. However, I'm going to keep my eyes open, and if I see something coming at me, I will take one of these 2 measures that's already in my head. So like the guy who says, hey, sell the houses. He didn't do it all in a week. It took him more than a year to get rid of everything. And that's, real estate's that way. And, he had a reasonably good price and he made good money. And, did he buy everything instantly? No, none of this stuff is instant. Day trading can be fairly instant, but even there, that's, as you know, not instant. It might take you 2 or 3 seconds to get filled. But
with our tool, with traditional tools, it's much longer.
Yeah, I agree. I used to, before we had that buy button, it'd be 20 seconds or something like that. And sometimes I clicked on the wrong thing and I'm like, oh, I didn't mean to do that. The point is, a reasonably good life, not a perfect life. There's no such thing as a perfect life, because I've met people that had the perfect parents and they're kind of miserable. You go, well, what? Not all of them, of course, but the point is, it's A doesn't guarantee B. It just doesn't happen, except then how you lay out the alphabet. But right. If you go to the dictionary, A does not follow B all that often.
That story you're telling really highlights some. Most people are trained, and I say most people, and I'm just saying this from a North American educated perspective, is we're taught how to basically use linear logic in dynamic systems, and that's a big problem. So that story really highlights how important it is to realize one thing. is your assumptions are based off of your environment. And there are a lot of things that influence that environment that you cannot possibly be aware of. For example,
Yeah.
geopolitical situation in Hong Kong. And then the financial situation in Hong Kong ended up affecting British Columbia, which then in turn ended up impacting the British Columbians in a way that is, favorable or unfavorable depending on who you ask. But things had to change if they wanted to stay in a certain quality of life. So this particular person chose to adapt. So
Yeah.
guys, when is the time to prepare and be ready to be agile? It's right now. It's not next year. Don't worry about the crash. Don't worry about the next bull market. Just worry about being prepared for anything, because no one actually knows. No one does.
Yeah, and then that's where the whole idea, we all have levels of tools. We all do. For example, I just set up home automation so that when the temperature gets to a certain level, a fan turns on in the house. And then when it gets lower level, the fan goes off. And it was click, 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 and there it was. And it was a tool. It's just a convenience, right? But does it simplify my life? Yes. Compared to what I was doing back in 2000, when I was trying to figure out how to make money in the markets, like consistently and easily and all that, the tools we have right now are super convenient compared to what was out there and is generally still out there. You and I, Stephen, we went, 8 months ago, snooping around just to see what other kinds of tools there are out there, just to say, well, did we actually make something useful, or are we, way behind the times? And you, I'm sure, remember that, Serge.
Yes, I do. And it is an outsider perspective, but one of the benefits we have is several of our members have come from those systems. So we actually do have an inside perspective on those other organizations that we were researching. And we found some interesting things, which is generally speaking, most of the stuff that people see are marketing efforts, not actual legitimate information.
Yeah. And I understand why people market the way they do. I was lucky to get into what I was doing. If I hadn't have been lucky, what would I do to, feed my family and get along in this world? Right? It's one of those.
Yeah. When
And,
survival's on the line, people's
yeah,
moral and ethical code often changes very, very quickly. And also, it can be predictable, but in most cases, the two people that are, one is assessing another's behavior, they're not under the same state. So the assumptions that you make about someone while you're comfortable are going to be different than if you are not comfortable making those same assumptions. So it's
yeah,
incredibly
exactly.
dynamic. So you got to build all that into your mental models.
And so that's where, you and I got lucky that we, got connected. And who could have calculated that? Nobody. But the point is that,
Yeah.
not even Facebook and Google could have calculated that.
Just to put that in context, I met Alan through a friend when I was walking up a mountain in Hawaii. That's how Alan and I got connected. A random paragliding person said, "Hey, you should meet my friend. If you like trading, you should meet my friend." Okay. And here we are.
Here we are.
Nobody could have predicted that.
Yeah. And so the chances of us producing what we did in a way that's accessible to anybody outside of, a small group or is extremely small. Super tiny fraction of a percent. And yet here it is. And where I'm mentioning all that is that the idea that, pinching off every penny and trying to get the most out of this and doing all this is not, who Stephen and I are. We're not that way. And never want to be that way, because it's actually, it feels hard to be inside that body when the mind is this way. Trying to grab everything they can out of every opportunity. Whereas, living in Hawaii or Mexico, or, the RV guy around traveling around doing his thing, that's much more appealing. Because what's the point of I will never have the most money on this planet. So here's one of those truths again. I will never have the least amount of money on the planet. So on the chart of where I am, I'm somewhere between the very top and the very bottom. That's the highest probability for me is to be there. Well, if that's the case, why would I even dare to compete to have the most or have the least? Why would I be interested in that? It's like, so then what is the focus if it's not the game of I won because I had the most toys? What's my focus? And I know for you and me, the focus is, to be of value to ourselves and the people around us, like real value, not, trying to pull money out, like you said, other people that don't have the good fortune that we had in, me discovering that I'm actually good with computers and math. If I didn't know that, which is quite possible, I wouldn't have had that. So, I have that base of gratitude, and because that's actually the appropriate response, not I deserve more. And if for people that are, looking for, well, I should have the most money or I should have the most power or all that, it's like, well, please don't be in my space because, not interested in that. We won't have that conversation.
Yeah. Well, the whole message of this entire thing is, guys, keep it simple, keep things in context. And what that means is you're choosing the context. What is your context? Because the right answer for me or for Alan may not be the right answer for you. Mm-hmm. But remember this, preparation happens in the present. The benefit happens in the future. All right, guys, stay agile, and thanks for listening. We'll see you next time.